Hey, welcome everyone to Story Trading Weekly VIP Meetup. We had a lot going on this past week with the Russia war and lots of awesome trade ideas. We had an event last week on that topic, and we're going to continue it tonight. So before we do that, just got to go through a quick disclaimer here, and we'll get started. So Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. We're going to do it in two parts. The first part will be up on social media a week afterwards, after the embargo, up on YouTube. And then we'll do a second part just for our VIPs. Those of you who are watching on YouTube, what's a story trade? Story trading is the practice of understanding market pricing through the lens of the four pillars of fundamentals, catalyst, sentiment, and technicals. We have a VIP community that collaborates on WhatsApp and on Zoom, and we're working on our own app you can sign up for at storytrading.com. You can also track our VIP picks and check up our events coming up. So war in Russia and Ukraine, trade and investment ideas. So let's get started. Ooh, I don't want to throw this up all in one shot. It's supposed to be animated. So I'm going to talk about the macroeconomic impact of this first, and then go into specific sectors which might do well. So first we'll talk about the near term, and then we'll talk about the long term. So near term, those who are trading. I have an account that's long term, and I have a trading account. So in my trading account, I try to be much more aggressive with my hedges and trades and all kinds of things like that. So looking at the trading near term, the bear case is, look, commodity prices are higher. We also have supply chain disruptions coming from the area that could lead to much higher near-term inflation, which then could lead to reduced discretionary income, which leads to recession. And the market pricing all of that in quickly, right, would be the bear case. All right. Now, on the other hand, the technicals were closed very strong on Friday. Even now, we know futures are down 2%, but they're still the lows that we hit the invasion morning, right? You guys remember that? Still not taken out. So I was actually very surprised. Why the strength on Friday? Because, you know, we're looking at corn exploding, oil exploding. We're talking about food inflation, energy inflation. And I'm like, dude, like things are going to get really bad economically. This thing's got who wants to hold over the weekend, right? I was actually pretty aggressive buying puts and different types of vehicles to benefit from a red day on Monday. Again, but the technicals are super strong. There's several technicians who I respect very much who all weekend long, they're like, Monday could be green. And some of them still saying, I just talked to them, even with futures down, it's still not taking out the lows. And they're like, tomorrow could still be a green day. So why are technicals so strong? And you know, it's story trading. We look at all four pillars because we believe markets make sense. And if people are out there buying for technical reasons, the assumption is there's a fundamental reason behind it, right? It's not random. People aren't randomly buying and selling. There's a reason for all the price action. So I spent endless hours going through lots of articles, looking at Twitter accounts, looking at, you know, people who know what they're talking about, trying to look for people with credibility to find out what was the bull case. Why were people buying on Friday? And I got a couple insights. Basically, I found out that the quote unquote consensus of the bulls who were buying on Friday were two things. One was Russia's getting beat so badly that there will soon be some sort of agreement or ceasefire or peace agreement, or maybe Putin's taken out somehow by his own people. And the next thing was that the Fed might not even increase rates at all, right? So we know that the chances or the number of rate increases, you saw the talking heads on TV and everything saying, oh, instead of like 8 increases, we'll have 4 or 5 this year, something like that. But the people who were buying Friday were like, maybe we'll just have 1 or none, right? Because to combat the recessionary dynamics of everything that, you know, I talked about in the bear case. So that's who was buying Friday. And that's why the lows haven't been taken out yet. Now, are they right or are they wrong? I personally think they're wrong, because even if there is some sort of ceasefire or something like that this week, I think the damage has already been done economically. For example, all the farms in Ukraine and the wheat coming out of Ukraine, like that's, forget, like who's going to operate that stuff, right? Like the fields have been damaged, the infrastructure damaged, you know, there's like million and a half people fled the country. So it's not like you can turn that around so fast, even in the best case scenario. So longer term, I'm still bearish, but maybe the bulls are right. Maybe the bulls are right in terms of the near term. So you got to be careful, right? You can have your longer term thesis, but who knows? Maybe we get a rip your face rally this week if there is some sort of resolution with Putin this week. Okay, so that's the near term on the macroeconomic impact. Again, I don't have my animation, so let's try to focus on the bear case again. Now we go longer term, right? So longer term, this has been my thesis for a long time. I've been saying this since early November, that the economy was already headed to a recession, and the war is just accelerating that. So even if there is a sudden positive resolution, right, there'll only be a temporary relief rally because it really doesn't even have to do with higher energy prices and higher food prices and supply chain issues from the war. It simply has to do with what was happening anyway beforehand, which was the higher interest rates, right, which we know at first hit the growth stocks. And then, you know, after that, I predicted eventually we'll get to the mega cap stocks and the QQQ because you'll have less people buying iPhones, et cetera, et cetera. So that's the bear case long term. Now, the bull case long term, this is interesting. I spent a lot of time thinking about this weekend. You guys remember the COVID crash, right? And in the worst of times when people thought there was going to be a depression, right? Like the economy is totally shutting down. What happened, right? That was like the bottom of the biggest boom we've ever seen. So, but fundamentally something happened there. It wasn't just the free money they were printing. Yes, that had a lot to do with it, but there was a whole sector of the economy took off. That was the internet and technology sector because the stay-at-home theme, right? So there's a potential we see something similar here because there's a huge sea change right now. These themes, right, are gigantic mega trend themes that could last like a decade. And they're like made in the USA, energy independence, agriculture independence, defense spending, right? So regardless of the outcome, right, whether there's a piece this week or a year or two from now, it doesn't matter. All that stuff I just talked about is going to happen because the trust is gone, right? That trust is gone with Russia. Now there's going to be suspicion about China also in the future. So this could potentially bring a whole manufacturing renaissance into America, a lot of investment into America. And at some point, you know, we could see, even if there is some sort of crash, we could see this a bottom come out of this and a ton of money moving into all of those sectors, which could take up the indices with it. That would be the bull case. I'm not so keen on that necessarily, maybe more so for SPY, but not like QQQ. I don't know what the composition of those is, but I think like a lot of those stocks are more in SPY rather than QQQ. But in any case, that's the bear and bull case for the short and long term based on the research I've been doing this weekend. Now, I want to talk about near-term possibility of a COVID-style crash. In a second, I'll show you a chart. But you know, I was talking to a technician who said, look, you're never going to get that again, like that big COVID crash, or it's not going to happen this time because COVID was a black swan event, right? And this isn't, right? I don't know why they would say this isn't, but some people believe that. So I don't know. I believe it is a black swan event. We'll talk about that a little bit, but here's the second point. This is very interesting. With COVID, the market did not crash for like 2 or 3 weeks. While it was clear, right, that the virus is coming out of the borders of China, it was clear how severe the virus was. It was clear the virus would come into America. Even after the virus started coming into America, the stock market didn't really crash until the closure started. I don't know if you guys remember that. So I look back at that and like, how do you explain that? Because I was actually buying puts big time. That changed my whole, to be honest with you, my whole life, right? Like that month, while the stock market was green and this virus was coming to America, I was buying puts like crazy and I ended up making a ton of money. It was just on a 2 or 3 week delay. So what do you call that? I call that denial, right? When there's like a black swan event that even hedge fund managers and mutual fund managers and big money, smart money, they just don't want to believe it, right? So is that what's going on today? Are we in the same situation now in regards to food and energy prices? Is the market in denial? How come we didn't, you know, I was expecting to be down like 5-6% at the end of the day. Friday, I'm exaggerating a little bit, but I thought we'd close down very hard on Friday, but there was so much strength, right? So why is that? Is the market in denial? Will the market only crash when it actually hits us and when a loaf of bread is double the cost in a couple of weeks from now and it's on the headlines of Drudge Report? Is that when the market will crash? Maybe, right? But you got to weigh this, right, bear thesis against the longer term bull thesis I talked about. All those scenarios are possible. You got to judge for yourself the percentage chance of each of these things happening and trade accordingly. More importantly, you got to understand the catalysts that would cause those bear cases to come to bear, or those bull cases to come to bear. So when you see the headlines, you can quickly react and make changes to your allocation. So I want to just bring this up regarding what I could possibly be looking for if there's a COVID style crash. Now, to be honest with you, I was thinking there was a chance of that for tomorrow morning. That's why I went heavy into puts on QQQ. For the first time since the COVID crash in my personal IRA, I brought SQQQ, which is very risky. That's not something you hold long term because it's triple levered and you can lose all your money very fast if it goes against you. That's something you only got to hold when the trend is in your favor. So in any case, what am I looking at? So first thing I want to show you is ARKK, right? This is the weekly moving average chart here, this blue line. That's the 200-week moving average. Now, down up here in early November, that's when I spotted a real big concern, and I warned the community that, hey, risk assets may be out of favor. And I concluded that both because of some technical action here, but also because higher interest rates started coming to the conversation. And everyone always knew that's the killer for growth stocks. So as soon as people started talking about higher interest rates, I started reducing my risk assets back then, and I've been continually reducing it. It's so hard to turn on a dime, right? To say, hey, I got all these risk assets making me so much money for 2 years. What are you going to do? Dump them all in 2 seconds? Some people can. I couldn't. So, but little by little, I started reducing risk assets. As the evidence grew, I'd reduce more. As it went down, I'd reduce more. So I've been reducing for months. At this point, I'm not even completely out of risk assets. I still have some. But anyway, back then, I'd called for the 200-week moving average to be initial support. I don't know how great of a support it did. It's trying to hang around there, right? And now it's actually below the 200-week moving average. Now, there's a possibility this goes lower, but this is not where I'm placing my bet. There's a possibility this, especially if you look at the 1998.com, 1999-2000.com bust, and you look at the shape of the chart with the QQQ, if that follows that pattern, this thing can go to like $40, $50 range before going sideways for several quarters and then rebounding. So I'm not ready to go into ARKK, but why am I bringing this up? I'm bringing it up because of that 200-week moving average, because look what we have here. Here's the QQQ. And I've been saying since that same time period, since, hey, look out for ARK, I was like, look out for QQQ next, because first you have the growth stocks are taken out because of higher interest rates. And then if you have a continuation of that dynamic in the economy with higher interest rates, then you can potentially get a recession, right? And before any of this war started coming, those of you who are in the rooms know it's been a couple months I've been pounding the table that I think there's going to be a recession in the second half of the year simply because of higher interest rates. So this is the 200-week moving average. We hit that with ARKK. Look at these down here. See this support in 2019? Look at the COVID lows here. This chart has a habit of hitting that 200-week moving average as a support line. And also, the way I view it, the 200-week moving average is a bullish channel, right? So for this QQQ to go to the 200-week moving average, it's not the end of the world. It's not a big deal. I mean, it's been up so much. I don't have the numbers in front of me, but it's something like, you know, even if it were to hit this line, and that's also a rising 200-week moving average, it's still going to be above the pre-COVID highs. It's going to be above the COVID lows. So what's all the panic about? What's all the big deal about? People made a ton of money and now it's correcting, right? And to me, that's like the bullish scenario. That's like the best case scenario. There's a possibility we go into like a deep recession and it goes below the 200-week moving average. So of course it should test the 200-week moving average, right? So that's my argument for, I've been in hedges since early November, whether it's PSQ or RWM or things like that in different allocations. This is my heaviest allocation of PSQ because I think that we could be having that black swan event, which can have a rapid decline to that blue line, right? And again, that's not the end of the world. And in fact, that may be it could be a repeat of what we saw with COVID, right? Where you had that whole, internet, technology, economy take us up. You could go down here and have the whole made in America, defense, agriculture, all those sectors take us up from there, right? Now, this doesn't have to happen, this hitting this 200-week moving average. It's merely a possibility. You guys have to judge for yourself what are the chances of that and how much do you want to hedge for that possibility. So those are my opinions on the micro and the macro, the short term, the long term, based on a lot of research I've done and a lot of thinking I've done over the weekend and the past couple of weeks. All right, so with that, I want to get into some ancillary impacts besides the macro. What are some mega trends that can benefit? So we're seeing obviously commodities, and finally my animations work, right? We see the commodity prices rising. We'll get into the details of each of these in a second. Missile and defense spending, I think could be very bullish. Energy independence, a big theme. Agriculture, a big theme. Supply chain and shipping play, something that Matt and our community pointed out. Eager to hear from him because he was spot on one of the commodity/agriculture plays. So we'll hear from him on that. So in terms of commodities, we know oil and natural gas, that's a big one everyone talks about. Potash, that's the one Matt brought to our community. IPI, not as much talked about. Wheat, corn, everyone I think at this point knows about. Very little talked about is palladium and neon and what that means for semiconductor manufacturing. So these mega trends I think will continue because of what I talked about with independence from Russia, right? And countries wanting to secure their own supply chains to whatever extent that they can. So that's the story with commodities. I just want to point out on Thursday night, we had a Twitter Spaces with Vegas, and our colleague Igal was on there, and we had specifically called out MOS as a great stock to play options on because the options on MOS were much, much more liquid than the options on IPI as a potash play. Well, what happened? Friday morning, right after a Thursday evening call, Friday morning, there was this headline that Russia minister of something or other said, recommended to ban exports of potash. Well, what did I do? 9:31 a.m., I bought calls on MOS. I was ready for it. I had it up on my screen. What a beauty. Now, everyone will have different ways of executing, and you can't execute perfectly. I ended up making like maybe around 200% total on different call options I had traded during the day on MOS. But man, one of them was up 1,000%. I grabbed it at 20 cents. This particular one, I sold it at 35 cents and it closed the day at $2, right? That was crazy, right? So huge winner. So if you understand the stories, you understand the catalyst, you're fast to move on the headlines, there's a lot of ways to make money. All right, so let's go to the next mega trend, missile and defense spending. So this is how I look at it. Trust is gone, and I think probably everyone would agree with this, right? Trust is gone, and an increased defense spending is here to stay for sure. I think this is probably the strongest, right? The strongest mega trend. But because if you go back and let's look at them a second. Commodities, you look at all this, right? The commodities and agriculture play, supply chain issues, right? Definitely those three can kind of be reversed if there's some sort of negotiated peace. It may take time, but it can potentially be reversed to some extent, right? Whereas energy independence, maybe not as much, but definitely missile and defense spending. No one's going to trust Russia anymore. And now who's going to trust China, right? People see that China's kind of on the side of Russia here. And so trust is gone. Increased defense spending here to stay regardless of the outcome. I'm going to show you an image already. We're already seeing new orders already in like a week, right? As a direct result of the conflict, government orders. So talk about that in a second. I'm particularly interested on missile defense, right? Because that's the real risk, right? You want to have like that Star Wars, I don't know, lasers or something shooting down all the nukes coming down. So none of the nukes get through like a defense ship. I don't know what's out there. I don't know what companies are involved there. Part of what I'm doing here, I do the research, right? To figure out what are the trends, what are the ideas, what's the sentiment, right? So that hopefully people in our community can go out and find specific stocks. So I don't really have specific names for you on this, but hopefully someone in our community can find it. The other thing is cybersecurity, hack. That's the ETF, HACK. Obviously, there's been a lot of talk about that maybe this can be taken to the next level now. But even if it's not taken to the next level, I think you're going to see a lot increased government spending and also in the private sector spending to make sure not only defensive capabilities in the private sector, but maybe even offensive capabilities in the government sector, although I don't know if they'd hire outside companies for that. So that's HACK, hack. Now, I told you there was something I want to show you here. This is just came out. Finland to purchase Israeli air defense systems due to Russian threat, right? This just happened. It is not taking months or quarters or years to play out. In a week, Finland already said, we're buying these Israeli air defense systems. Now, you can go and look for that article, Google it. They didn't make the purchase order yet because it's down to 2 companies. I think Rafael Industries and another one, I forget which. So I'm not even sure if these companies are publicly traded. I don't have time. I haven't had time to look into it, but here's an opportunity. You guys go do the research and let us know in the community what could be good to buy. But I think you're going to see a sentiment tailwind in everything, especially if they have missile defense, air defense is part of what they sell, or supply chains for it, or components of it. I think this is going to be a ton of government spending worldwide on this coming up in the next decade. So one thing I did look at, because I don't have time to look at individual stocks, is a ETF PPA. I've already bought this for my IRA. I looked at a few, didn't have a lot of time to research, but I looked at a few ETFs, and I chose this one because their top holding was Lockheed Martin and Raytheon, and Lockheed Martin and Raytheon together make the Javelin missile, which is in the press a lot. This is the anti-tank missiles that are being used and given to Ukraine. So I got those. Also in here, I think I was starting to do a little research on the air defense, and I think I heard that Honeywell and Northrop Grumman are involved in air defense. So those are top 10 here. So I feel like this is a great stock I can hold long-term, maybe for the next 10 years. So there you go with missile and defense. And those of you who are interested in cybersecurity, again, haven't had time to look in specific names, but ETF for you, HACK, you can see the composition of the stocks in HACK. All right, next megatrend, energy. Now, I have not been really on top of the energy at all, even though it's been a huge thing. For some reason, I just never trade oil or energy, so I've kind of missed out potentially. But hey, look at this. I'm going to show you an article in a second. Warren Buffett, Berkshire Hathaway, was buying Oxy, OXY, hand over fist yesterday, even after the stock went up a lot. So that was very interesting. Nuclear energy, right? Alternative energy sources. We have uranium plays. Now, this is a little bit trickier to play because of, at least in the short term, because of what happened with that conflict at the nuclear power plant. So that could give, you could speculate, one could speculate, an investor or trader today could speculate that perhaps it would give governments pause, right, in going towards nuclear in the future. Whether that's true or not longer term, fundamentally, it's certainly reasonable why short-term traders would have a sentiment and a worry about that. So this one's a little bit trickier to play. I'm not sure how it's going to play out. It's a little bit risky because who knows? Maybe something could happen that could damage a nuclear reactor here. We're still in the middle of a hot conflict. So you could do what you like with that. I know with the drop Friday, some people use it as an opportunity to buy because they are still very bullish no matter what happens. You may nuclear energy long-term, and they may be right. I'm being a little more cautious on that right now. And then you have solar energy plays, which make a lot of sense. That's an ETF, TAN. I don't think I had time to throw up the composition of what's in the TAN ETF. And then obviously I have electric vehicle plays. Personally, I think electric vehicles a little bit early, a little bit dangerous. This is something that maybe you'll want to buy on the dips if, in case the market goes down. And when the market rebounds, it'll do well because I'm worried about recession, right? So yeah, longer term, huge tailwind for EV. But if people are using all their money to buy bread and gas, even if they're not buying gas, you know, gas goes into inflation for everything, right? So if people have less discretionary income, they're going to have less income to buy a new car or buy a new EV, which may be upfront more cash than a internal combustion engine car. So that's the EV plays. All right. So here, yeah, here's the thing. There's Warren Buffett. Berkshire ramps up wager on Occidental as crude prices surge. Berkshire purchased 30 million additional shares of Occidental. And we will look, and tonight oil is up 10% at like it hit like 130, and I don't know, before the show it was 127 or 128. So in the extended session that's not going on social media, we could possibly, you know, if people are interested, we can pull up the chart on OXY and some other oil stocks as well. Let's go to the agriculture plays. Mega trend here. So First of all, why is it a megatrend? So because we have wheat, corn, and soybean, the supply chains really being disrupted out of Russia and Ukraine. The prices are going up. And again, same idea as energy independence, potentially. I don't know this to be a fact, or I don't know the capabilities of other countries to scale up their agriculture and make more crops, do less imports from Russia and Ukraine. And at this point, you can't count on Ukraine, right? If you got all your grain from Ukraine in the past, you have to assume that maybe that's going to be under Russia control, and you may not be able to get as easy access to grain from Russia and Ukraine. So there could be investment in agriculture for more agriculture independence. At least for me, this one's a little bit more speculative because I don't have a full grasp of the understanding of the agriculture infrastructure and what opportunities maybe exist to scale that up. But what came to mind, first of all, there's an ETF, DBA. I think that's the biggest ETF in the agriculture sector. What specifically came to mind right away for me was Deere & Company, DE. Also was in my mind because one of the technicians, I think on the Thursday night Twitter spaces, I think was I Love Vegas, pointed out DE, said it had a strong chart. So that was in my mind. I looked it up and, you know, lo and behold, it's the biggest ETF for the agriculture space. Before I get into the potash, it's also kind of agriculture, right? Because you need fertilizer to grow this stuff. I am going to show, actually, I'm going to bring on Matt in a second. But before I do that, take a look at this passage from a microcap ag company. They sell agriculture equipment, right? And I don't have a position in this stock. I don't want to mention it right now because I haven't done full research and it's a very, very low market cap. But look what the commentary on the last earnings call was. It says they had very good sales and earnings. It says the sales increase is attributable to favorable agricultural market conditions as commodity prices hit 5-year highs, right? So there's a relationship here between commodity prices being high and people buying agriculture equipment. So we know that. And then they went on to say, despite continued margin pressure from increased material and component costs, our agriculture product segment was able to combat margin erosion through multiple price increases to customers, right? Because, well, people have to buy food, right? So that's just the way it is. I don't think the farmers are going to be nice and say, oh, we feel bad for you, let's keep the prices low. They're going to, this is their opportunity to make money. And what's going to happen? People will buy less iPhones, right? So that's for me the thesis for agriculture plays, but I don't have a full understanding again of, like, for example, what can America do? Can America replace that supply that was coming from Russia and Ukraine and sell, you know, export more grain to countries in the Middle East and Africa, where I think most of those exports are going to, right? So I don't know the answer to that. So with that, I just want to introduce the supply chain shipping plays real quick. So Matt, if you're on, you had this great idea, but before you talk about your supply chain and shipping plays, if you can give a quick update on your thoughts on potash, IPI, and then tell us a little bit about this supply chain shipping plays. You there, Matt?
Yeah, sure. Thanks, Ben.
Awesome.
Thanks. Can you hear me?
Coming tonight. We hear you.
Hey, I just want to say, I think Ben does an amazing job with bringing these trends together. And I think all the work you do, Ben, it's really underrated. So, because part of it's having the idea or theme, but it's also executing it, you know, at the right speed. And this has all happened really fast in the last week. So I've been, I guess, doing similar to you, Ben, and many people, just trying to understand and process what's going on, because there's so many different themes. And we all have different expertise, you know. So really appreciate that, Ben.
Yep, thank you. And I appreciate you and your contributions. That was an awesome time. I mean, you had the foresight to let us know about IPI before the invasion started. You're like, hey, if this invasion happens, buy IPI. And that was sweet. I personally made a lot of money from it. So thank you.
So I was invested in IPI already, because I just, you know, fertilizer it's an interesting thing. So supply is already pretty tight because the world's growing. So we've got growing populations, we need more food. So food security is such a big issue. And potash is an unusual thing. So a lot of it is extracted as a brine, and then they have to dry that material to get the potassium out. So it basically gets dried and processed. So it's a complicated sort of operation. And there is more supply coming on. BHP have a big potash operation in Canada. I believe they're working on at the moment, but I don't believe that's in the market yet. And I haven't looked into that closely. But in terms of Russia and Belarus, I knew they were the largest potash producers in the world already. And Russia is actually one of the largest urea producers, which is a product or base for nitrogen fertilizer. So there's basically three types of fertilizer. You'll see N, P, K. So nitrogen is the N, potassium the P, and phosphorus is the P, and K is potassium. So, they typically have to be used in certain ratios. And I would say in the next, in this current environment with lack of access to Russia and Belarus, if that's what's going to happen this year, we don't know, but if that is what's going to happen, I think anything fertilizer, anything farming or grain is just a good investment to have in the medium term. Personally, that's how I feel about it. I don't feel a lot of risk. There could be some chop day to day, but I don't feel a lot of risk of holding those in this current environment. Things like corn and wheat futures, and you can trade some of these by the ETFs. I don't invest in those, and I don't invest in them for a few reasons, tax reasons, but they also have a real seasonality to how they trade. So wheat, and you're seeing this with oil and wheat at the moment, they're going up vertically because it's a tight market, and like any commodity, if there's a restriction of supply, the price can just go vertical, but equally it could fall equally as fast as it goes up. So that's a game for experts, I think, personally. But underlying companies, the supply chain as well, anything in shipping at the moment, I think is worth looking at if you understand shipping. And I'm thinking the dry bulk goods, particularly. So these are ships that transport, iron ore, grains, coal. They're quite different kind of operations. There's a fixed number of ships, and they are not. You order a ship, it takes years to add to the supply. So we've got a fixed number of ships, and this is what we've seen with the container shipping over the last year with COVID. There are no new container ships. There's a whole lot on order at the moment that are going to get delivered in a year's time. And that's the risk of investing in a shipping cycle, is there will be more supply of ships at some point. But in relation to dry bulk goods, there's those ships are not available today either. And if you have to sail and take different routes due to this conflict, if you have goods going to different places, so longer trips, because they're not just going from Russia to a nearby location, because that's no longer a feature, you suddenly have goods moving in different directions and longer routes. So that's something for people to look at as well. And I guess I'm a bit like you, Ben. I'm not going to sort of name or promote any particular stock, because I think it's quite easy to research these themes yourself. And if people want to look at a sector, like if you just went on, say, FinViz and typed in one ticker, you can see what sector that ticker is part of and very quickly click that. And if you click, so for Mosaic, and if you click agriculture products or the sector that's in, it comes up with 16 tickers. There's only 16 US tickers in agriculture. And, if you wanted to learn about all those quite quickly, you could read some, presentations and conference calls. So I've got a couple there I'm looking at that I might buy this week, because I think, based on what's happened over the last week, I think, and what you're talking about with inflation and the recession potential, Ben, I think the whole market is underestimating what's going on, personally. I think it is a bit like COVID. And I think I think everyone is underexposed to commodities and hard goods. And that includes minerals that are in the ground, whether they're copper, whether they're nickel, whatever.
Oh yeah, copper too? Oh, I saw nickel was surging tonight in futures.
Anything, because in
Mhm.
inflation, if you think of a resource like that that's in a mine and maybe the operation's valued at 5 times earnings, if the price of the underlying good is going up, or your gold as well, you're protected against that inflation if you own real hard goods, and same to a degree with agricultural products. So I think from a portfolio level, those are the things to really have a good think about. Defense stocks, hacking, the IT, cybersecurity, I think all those are good, but some of those stocks, you have to look at what they're valued at. And, if there's a recession, it's a trade-off between, am I buying something at a fair price, which I think for a lot of the commodity companies, you're buying things incredibly cheaply already. And like the shipping companies have huge dividends they can pay off because their earnings are very visible, what they're earning today. And same with some commodity companies. Some of the coal companies trade on 2 to 3 times EBITDA, and they're going to earn, like within a year, they're going to be able to earn their market cap at current rates. So, that's a cheap company that in a shortage of a commodity that isn't going to change very quickly, because even if, let's say, the war in Russia and some way is resolved in the next week, which I think the market believes is probably going to happen. If that happened, I think the sanctions stay for a lot of goods. They probably can't stay for oil and gas because Europe would crumble without Russian oil and gas. And the world to a degree would, because of inflation. But, Russia's going to be in the penalty box for a while after this.
Yeah, I agree.
Even if it gets resolved. So that's just my high level. That's how I'm sort of seeing it. And I think there's some really interesting themes to play. I didn't invest particularly well through COVID, through any of these themes. I found it really hard to follow what was happening with the amount of stimulus in the US that was unprecedented, and what was going on. It was crazy in a way, but I'm trying to be a bit closer to the themes here and see if we can make some money.
Cool. Sounds good, Matt. I appreciate that. I did want to ask you about something that you didn't mention here. You said in the room a vessel was sunk outside of Odessa, and you were concerned about shipping through the Black Sea and insurance and port visits.
So it's just so any goods coming out of Russia, Ukraine are coming out of that port in the Black Sea. It's quite a key kind of mode of transport.
Odessa, there's a war there right now. They're like bombing Odessa right now, I think.
Yeah, but it's just, if you think, okay, here's a shipping transit lane that the world can't use anymore, then the flow of goods is, and we already think the flow of goods is stopping out of Russia and Ukraine anyway, but let's say it's not safe to use that, those goods aren't coming. Even if you had the grain and the wheat was produced that year, if there's still some conflict going or risk around shipping into that location because, there might be military action, it's just going to change and create supply disruption. And this is what COVID did with shipping. It created very unusual supply disruptions. And I just think that was starting to get resolved with container shipping. It probably goes a lot longer.
Okay. That's awesome. Appreciate those insights. You have been spectacular in the rooms along with me focusing on these. So I really appreciate that, Matt. Thank you so much for
So I don't really trade day to day. And I'm not kind of in the trading room so much, kind of, let's buy this today. That's not my style. But really appreciate that, Ben.
Awesome. Thank you. All right. So with that, got a couple more items, and then we will one last item actually, and then we're going to open it up for a chat that's not going to go on the YouTube. So here's a bonus one to think about. This is not one that I would like put in my IRA, like maybe trade ideas, because I don't really believe in this kind of investment long term, right? If there's a nuclear war, it doesn't matter, right? But I bet you, and I think there were in the past, I've heard of like, Armageddon stocks, like, because especially they're usually smaller companies that make like underground bunkers, or companies that sell guns, maybe to some extent, like maybe POWW, they have great fundamentals anyway. So maybe that's a longer term investment. We talked about that. But I think there is an opportunity there if you're so inclined to look into and find stocks that would benefit from higher demand, because I can guarantee you there's a good percentage of people in America and probably around the world, but probably more so particularly America, who would be spending more money on stocking up on Armageddon supplies, whether it's, there's companies that do this. They sell like packages of, kits of canned goods and all kinds of other things you may need in case there's like an Armageddon situation, and companies that will build like these underground bunkers for you under your house or something like that. So, well, next to your house. So anyway, those are opportunities. I would consider them more trade ideas. I would be interested in trading them if you guys found them, so let us know. So with that, we do have a Russia-Ukraine war ideas room we've opened for VIP members. So that's a great place to collaborate on these ideas. As Matt had mentioned, we also have a trading room, or VIP trading room, which is more day-to-day action. So you can head over to StoryTrading and find out more about everything we do there and upgrade to become part of our community. You can also follow us on YouTube and StoryTrading. By the way, we're also now on Spotify, storytrading.com/Spotify. So same videos that are on YouTube, but it's often easier to listen to it on Spotify. So with that, we're going to say goodbye to the social media.